Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock. With news, we're near the end of the American summer holiday season, and markets will return in earnest next week after their Labor Day holiday. But markets are open now and are still absorbing economic news. Firstly, in the US, we got official confirmation that higher tariffs are to be imposed on October the 1st. It is no longer just a tweet threat. Business groups say this is coming at the worst possible time, and consumers are now saying the American economy is getting worse. And there was a sharp drop in mortgage applications last week. And China is still ignoring the US calls for renewed trade war talks. No one is confirming that calls from China actually took place. But Wall Street is up strongly today, with the S&P 500 up 0.7% so far in afternoon trade, even if it is light trading. Equity investors seem to be ignoring any warning signs. But it is healthcare and big pharma stocks that are driving today's rise. However, recession fears are building in the bond markets. The US Treasury 30-year bond hit just 1.9% a few hours ago, and that is an all-time low amid unrelenting demand for low-risk government debt. US Treasury 30-year yields are now below 3-month Treasury bill rates for the first time since 2007. In China, their households are getting deeper into debt. It was just a few years ago when Chinese household savings seemed unusually high. Things have turned substantially, and households now have 55% of GDP as debt liabilities. That is up from 51% just a year ago. The explosion of consumer lending is behind the sharp reversal. Official data show that in June, consumer loans increased 21% from the same time last year, while the expansion of retail sales slowed to a 15-year low of rising just 9%. But much worse are corporates who hold 155% of GDP in debt exposure, and that while that's not getting worse, it remains a huge load and critical vulnerability for China. In the UK, their new Prime Minister is threatening to dissolve Parliament early to prevent any democratic stumbling blocks to his goal of a hard Brexit. The British currency fell on the news. In Australia, the latest data for construction completed has been described as ugly, as they fell more than expected and suggesting that economic slowdown fears are materialising. US Treasury 10-year yield is down 2 basis points to 1.47% today. The widening of inversions continues. Gold is unchanged at $1,542 an ounce, and US oil prices are up about $1 again and are now just on $55.50 a barrel. The Brent benchmark is up to $60.50 a barrel. And the Kiwi dollar is softer again today, now down to 63.4 US cents. On the cross rates, we've slipped to just under 94 Aussie cents, and against the euro, we're softer at 57.2 euro cents. That pushes the trade-weighted index down to 68.7, and its lowest since September 2015. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.